This is not investment advice, but it is how I grew my portfolio from $200 to nearly six figures. Look guys, I'm not going to beat around the bush. If you want to listen about high yield and dividend investing and safe, slow growing stocks, this video is not for you. My name's Liam and this is the Hustle Brothers. I started my investment journey a few years back in my early to mid 20s and I didn't know where to turn. There was loads of conflicting opinions whether it was to invest in simple ETFs like the S&P 500, safe high yielding dividend stocks to let your money accumulate over time, or was it to follow the dangerous path of day trading? And to be fair, Virgin Galactic did make me quite a bit of money at the time. Guys, I can tell you I've tried all three of these strategies, and if done right, they do work. But I'm going to disclose what strategy I used to gain massive momentum and gain nearly six figures in my own portfolio. I take high risk, high reward approach, and it's not what you think. Yes, I do take some high risk moves, but there's a lot of calculation that goes in behind what looks like madness. I don't think there's any way of perfectly predicting where the stock's going using charts to see where the stock goes up and down, the use of fundamentals of the business, or painstakingly reading through balance sheets. But let me tell you, an accumulation of all three of these in highly speculative stocks can reap a lot of rewards. Now, I'm not saying jump into the next craze like Lucid or GameStop. Well, that to me would be stupid. I'll tell you exactly the types of stocks I invest in, exactly why I do it, where I see them going, and my current strategies I deploy, and also, do I continuously fund my account? So make sure to hit that subscribe button. So for me, you need to have high conviction in stocks you're going into. It does take me weeks of planning, looking at balance sheets, seeing if they align what the business should do, where they stand in comparison to their competition. And let me highlight here, most companies I first inject into are pre-profit. So I need to see when is the company expecting to be profitable? How are they going to get there? And are they meeting targets and expectations? Next, I jump into the chart, see what the current price is, where we're standing previously, and I use the likes of Williams fractals, the relative strength index, and Fibonacci retracements, just to give me an idea what direction I can see the stock heading in the midterm. Guys, this is important. With this type of investing, I'm not looking at the short term, and that might surprise you, but I look at the midterm. I could hold the stock for up to a year before I jump back out of it, or if I'm really high conviction in it, like I am with the likes of Rocket Lab, until my thesis is broken. So I do expect to hold Rocket Lab for 20 plus years. With these stocks, I'm not looking to buy at the bottom. I never ever try to time the market. However, I am looking for a discount. You need to act like a shark and remember these words. When there's blood in the water, we feed, e.g. on red days when the stock is down and everyone is fearful and everything is gone to zero. This is the days I buy. I love it because I'm telling you, the market is always overreactional and it always comes back around. These days you can get a 5 to 10% discount on your stock, which is like a year in the S&P, I like to say. Then, again, act like a shark when the market's going swimmingly. Just swim with the current, do not feast, just relax. This is why you're in the market. With this strategy, I never sell any stock until I'm at least 15% up, or how I like to say it, 1.5 years return on the S&P. When I then get the cash, I don't just sit there. I jump straight back in to the S&P 500 and let it accumulate there. Yes, I could be buying at an all-time high, and if the market turns, yes, I may even sell at a 1% loss. But that's only if my high conviction stocks pull back 5 to 10%. So in essence, then I've made another 9% gain on the stock. And that's only the worst case scenario. Potentially the S&P could have grown a few percentage points by the time I sell it. so I've made a profit on it also. Then it's just rinse and repeat. It's easy. With this strategy though, it's not for the faint-hearted. You need to be on the ball every day and reactive to the news as it comes out, and just sit like a leopard waiting to pounce an opportunity. Never, ever, ever sell at a loss. I do not lose money. If the money has to sit there a year until it becomes profitable, so be it. I never sell at a loss, with the only exception, the S&P. And that's only to buy a massive opportunity on a red day. As I said, the 5 to 10% pullback. So, how do I react in these days? Well, I constantly top up my account on payday. So, when you get paid in your job, top up your account. Remember, the poor spend and invest the rest. The rich invest, then spend the rest. Investing account should always come first. At this early stage of a portfolio, you always need to back it up with whatever it is. An extra $10, $100, $500. Every dollar counts. Just think of each dollar as an employee working for you to grow your wealth. The more workers you have, the quicker and easier you'll get to your target. Do you buy a coffee a day? That's about $5. That's $35 a week, which is around $1,820 a year. Then do we have takeaways, crisps, beer? Can you see how it can add up to about $100 a week? It's easy to save an extra $100 a week and put it into your investment account. That's $5,000 a year. If we deploy this strategy and make at least 15% per action, we can see where this is going. The extra saving of $100 a week under the 15% principle over 10 years is nearly $102,000, and that's just extra on top of what you're already investing. Want to do this over 20 years? You're looking at over $500,000. Guys, this is easy, and it's all about getting your priorities straight and just remaining focused. So what stocks do I focus on at the moment? So at the moment, I'm currently in very few stocks, as I've made quite a few nice returns, and I'm waiting for some nice opportunities. However, I am in the likes of Rocket Lab, which I'm currently 47% up on, and I've no thought of selling, as I can see much greater returns in the mid to long term. I do have positions in the likes of Archer and Joby Aviation, which are new air taxi businesses, which have electric vertical takeoff and landing vehicles, which are on course to commercially be ready for customers in 2025. So you can see where I'm going with this. The next one will shock you because it's not highly speculative, but I am in Google and currently loading up at the moment. I can see a 20 to 30% rally coming soon once this lawsuit is settled. And then I have the S&P loaded quite nicely. I'm up about 8% on that and waiting for the next opportunity. I do have a few stocks on watch as well. I have the likes of Tesla, which I'm currently looking at, see how full self-driving plan plays out. And Nvidia, I can see a nice short-term move, as I really could see it rallying beyond that $130, which would be about a 15% gain or so. As you can see, I'm always looking for at least 15% gain above the market. Now, this is the perfect time for you to subscribe, because I'm starting my own live investment portfolio. I'm starting a new one that'll be just for this experiment, which will be $100, and I'm going to bring it all the way to 100k live on air and show you exactly how the strategy plays out. With this, you can suggest stocks, you can critique my moves. We're going to have a bit of fun. So make sure to bang that subscribe and leave a comment and tell me what your risky stocks are. Alright guys, this is the Hustle Brothers. Peace out.